Hi there everyone, hope you're all well and welcome back to the channel. So today we are going to be looking over the Fibonacci. The format of this video is going to be the same as if it was in the course. So this video here is a very condensed version of the Fibonacci in the course. So this just gives you an insight into kind of how it works. So we're going to go over it in simple terms through a PowerPoint, and then we're going to go into the charts and I'll show you obviously how to use a Fibonacci. So what we'll do, we'll get straight into it. So it's a confluence that we use when we are trading the market. Like we see with the key levels, the EMAs, trend lines, all the previous videos, this is just another confluence when we are looking to get into the market. So in general terms, it is a short-term price correction during an upward or a downward movement. So that is basically how we can find entry points when price corrects itself. So it's almost like a reversal. If price is pushing up, it starts then pulling down. Where can we look to get into the market? In the direction of the general trend. Okay, so if we are visually looking at the Fibonacci, this is the levels that I would personally use. So from the top, you've got the 100%. Each number down the right hand side represents a percentage in the retracement. So if you was to go from the 1, which is the 100, down to the 0, where price currently, for example, is, this here is 38% of the move back. Easy maths, like you say, the 50% here is literally just halfway between the start to the end. So we can use these areas on the Fibonacci to try find places within the market where we want to buy and sell. Okay, so if we're looking at it from a bullish example or a buy, we're knowing that in this example here, the market is pushing up. Because the market is pushing up, we are going to draw the Fibonacci from the most recent low. In this scenario, it's a higher low, up to where price pulls back. Okay, so this is literally the way I trade. I use Fibonacci's in every example. So with the group that we run, every morning I will send, for example, 3 to 4 charts of trades I'm looking at for the day. They will all involve the Fibonacci and other confluences, and then that way the members can see what I'm looking at for the day, set the pendings, and then that is it. Work is done. So if you are obviously interested in the group, link to that is in the bio. But obviously going back to this, you are just going to draw a Fibonacci from the most recent low to the most recent high. And then with these areas here, we can look to then start finding confluences that back our bias. Okay? So when we are using the Fib, we are only interested in these levels here because this is the ones that are on our Fibonacci. If we were to go into an example of a buy, if we're just looking at this market, where do you think you would draw your Fibonacci? So we've got a low here, a high here. So what can we do and what do you think we would do? Draw a Fibonacci like so. You can see in this example here, the 38 price has bounced from it. You've also now got the 50, the 61 and the 78 to play with, depending on if your other confluences line up with that on your chart. Okay? On the flip side, you've got a sell example. Exact same process where you're looking at the most recent high in this sense, down to the most recent low. You've got the 38, 50, 61, 78%. And then all you are going to do is then try find areas in the market that line up with these areas. Okay, so usually when you are looking at the market, it's going to stand out exactly where these highs and lows are. So you shouldn't have to squint and stuff. Just focus on the main moves within the market, and that's obviously going to help. If we look at a chart example, where do you think you could draw one in this scenario here? Pause the video if you want to work it out yourself before I give you the answer. Answer in 3, 2, 1. There. Okay. Could potentially draw one from here as well, because obviously you've got a pullback and then a drop. And you can see here, price has moved. I'm assuming that there is a 50 Fibonacci where price has moved. That one there is a 78. If you had other confluences lining up, that is absolutely great. Okay, so what we'll do now, I just want to go over some chart examples. I will basically chart up using the confluences that you see in the YouTube videos that I've recently done. So what we will do, we will get onto the charts, and then obviously, hopefully by the end of that, you know exactly what. Guys, so we're now looking at Euro Australian dollar on the 4-hour chart. When we are looking at this example, we can see that the most recent push has been to the upside. So what I'm going to do is basically chart up as I would with the trades that I send to the group. So I would start from the low, go to the high, and if I'm looking at this now, I have areas to choose from within this market, okay? Realistically, if we're looking at market structure as overall, would potentially be maybe looking at a break and retest of that area there, just in terms of general market structure. You can also see that we have one of the strong key levels, because this basically means every time this level has been respected, the past few times, it has pretty much obviously worked. Once it's done that, it's broke it. So now it's broke it, we're potentially expecting that the retest is going to happen. So what you could potentially do now is look to set your trade. I always like to stick a buffer on trades, in all honesty. I don't really like entering perfectly on the confluence. You can see that actually you do actually have a low over here, which could be part of that zone. So then what you could maybe look to do is enter on that, put your stop loss wherever you want. It could be below the next fib level. It could be a fixed stop loss of, let's say, 30, whatever your confluence and testing shows. And then if we look what happens, price comes in, does the break retest, and then continues going, okay? So just from looking at this example here, this is what you could have had in terms of a position. Now if we then go on to the next leg, you can see that this right here has now been an area where you could potentially look at. Same again, what we're looking at, break and retest. Fibonacci, what happens? Price comes down and then takes off. So just from using the Fibonacci in a break retest scenario, this is literally what you'd be working with. You'd currently have a position from here and currently have a position from here. Okay? If we just look, and what I'm going to do now is just show you it from a generic perspective when looking at the Fibonacci. You can see that when you've had a big move like so, you can see that the 50 fib worked once again, the 38, sorry, with a break retest. But then if you just play it out, you can see sometimes the areas are going to work. Here, retest of a low, 61 fib. So you can see here, the 50 fib didn't work. Why didn't it work? Well, if you look to the left, there's nothing that's stopping price going through this area, okay? Whereas here, you've got a previous low retest. And then as you can see, price then literally just carries on, okay? If we then look at this same example here, and let me just put these like that. You can see, same again, if we've got a new swing, go up to here, and then let's just play out and see what happens. That. So if we're looking at these areas here, you can see realistically the break retest was up here, so that already happened, don't need to worry about that. What happened on the 50 fib, there was nothing to stop it, whereas here, if we look in and around this area, depending on what your zone preference would be, you've got a break retest of this area here, 61 Fibonacci, and you can see that that has then obviously worked as well. So just from going over the examples, when you're looking at market structure, whether it's a key level, market structure, trend line, whatever your actual way of trading shows to do, having the Fibonacci there is a really good tool. And let's just see if price pulls back from here, is a really good tool to have. Sometimes, if there's a fundamental driver, and I think from what I remember, this is for the PMI and the HCOB, where obviously the market tends to just go one way for the rest of the day. But you can see sometimes it's not going to work, okay? We can't help that. It is what it is. This here was a fundamental move, so obviously that's what takes over, not the Fibonacci. But going back to it, you can see the thought process and obviously how to use it. So if you have enjoyed this video, guys, please leave a thumbs up. All links to the group and things like that are in the bio should you want to join. Any questions, put them in the comments. But yeah, I'll see you in the next video.